Reserve meets today and is expected to signal that it is ready to raise interest rates as soon as March. The Fed's short-term rate has been locked near zero since the pandemic began in 2020, which has fueled borrowing and spending by consumers and businesses, but also inflation. No doubt it's been a rough start to the year for the financial markets. The drama is blamed on uncertainty caused by rising inflation, disappointing earnings in some cases, and anxiety about the decision from the Federal Reserve, not to mention tensions with Russia. So with a closer look at what's going on with investors and what we should know, we're joined by Ernie Burns from Burns Financial. Good morning, Ernie. How you doing?
Good morning. Good morning. Good to see you.
So a lot of questions here. Obviously, those low rates kind of made heyday for a lot of investors in 2020 and 2021. Things are kind of turning around right now. We've seen the market dropping since the first of the year. Why do you think it's dropped so quickly?
Well, a variety of reasons. It's really three things happening at one time. First, you have the Federal Reserve walking a tightrope right now. How fast should we raise rates to battle inflation, which is the second issue there. How fast should we do this? They don't want to basically cut off spending right away. And they have done a variety of things in the last 2 months to confuse people. First, they talked about 2 or 3 rate increases. Then they talked about maybe 4. Then they peeled back maybe 2 to 3 about 2 weeks ago. So they're confusing people right now in the markets right now.
So if you know, they say, hey, we're going to raise rates, that would, for some investors, signal that it would fight inflation. Would that be a reason that the market would go up or potentially go down? Does inflation have anything to do with which way the market's going to change?
Yes. So here's what we're looking at right now. If he comes out and says this afternoon, we're going to have 2 to 3 interest rates, we're going to see a bull market. We're going to see it explode upward. If he says possibly 4 to maybe 5, you'll see another downturn of another 10%. Personally, I don't think he's going to do that. I think he's going to try to lever everything off and creep his way into it. He's never been too aggressive in raising rates. In addition to the reason this is happening, the White House and Federal Reserve kind of miscalculated inflation. They thought it was transitory, and it has not been transitory. It has been continuous. You know, look at the price of food and groceries right now, along with automobiles and things of that nature. And then we have supply chain shortages because of COVID issues, and that's all built in with it. And it's because of factors that people are not going to work, they're not able to produce, and therefore you have supply chain shortages, which has caused inflation. So you have 3 things happening right here. You have interest rate hikes that need to occur to battle inflation. You have COVID, and then you also have supply chain shortages. So a lot of things are occurring. So they have to walk a tightrope right now.
So some certainty from the Fed would give investors some more confidence there and potentially trigger a bull market and maybe bring inflation back to that transitory range, right?
Right. And here's the thing. In the past, Chairman Powell has not got too aggressive when he raised them. He looked at things 2 years ago in 2018, well, 3 years ago now, and started raising a little late there. But if he basically peels the apple the right way, or excuse me, the orange, he peels the orange the right way and walks into this with maybe 2 to 3 hikes this year, you're going to see continuance of the market. In addition to, I don't think you have inflation peel upward too much more. I think it would actually start peeling back. So watch what's going on. In addition to, right now, the market, in my belief, is oversold right now. It's oversold. A little too much reaction to what might happen. So there's actually some stocks on sale right now.
Right, oversold, meaning, you know, that now's a good opportunity if you have money in your account to purchase some stocks, sit and hold. We'll wait for that Fed decision later today. It could be a great signal for investors. As always, we thank you for your insight, Ernie.
No problem. Thanks for having me.